As I think nostalgically of markets in the past, and mails pour in asking, how long can this last? Bitcoin nears 8,000. You can buy weed. What can be wrong? Don't fight the climb. Take a sip. Grab the bong. What comes to mind is this nostalgic song.
Well, I'm going to the city and I'm gonna do a steady show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone riding, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go askSlim.
Hi, I'm Steve Miller. Call me Slim. And this is the askSlim Market Week. It's a look back at what happened in the financial markets in the past week, and a look forward at what might happen in the next week. And hopefully lots of great ideas and opportunities for you throughout the show. So the stock market overcame an early dip this week, rebounding strongly on Thursday to finish mixed. Sellers came in as there was some weakness that came in the Asian markets. They give back some gains. They had been really strong, but then buyers came back with a vengeance. After the news was pretty clear that the House was going to pass their version of the tax plan, and then it did pass. So stocks were strong, really strong on Thursday. The Nasdaq really exploded. And now it goes to the Senate, and they have the big challenge of merging together the two plans. And the two plans have some pretty distinct differences. So that is going to take some time, and we're going to see plenty in the news about that. And Fed heads, they're out talking up the December rate hike, and that's pretty much baked in. Everybody knows that that's coming, and that really should not affect the markets very much. And then the Democrats bring out articles of impeachment against President Donald Trump, and that brought really nothing but a little bit of a chuckle. Let's take a look at what happened in our stock market here in the last week as we look at our 60-minute chart of the S&P 500. Here is that chart coming up right now. So you could see that we had some weakness early in the week. There was a distinctive pattern going on that I marked off. Did a video recently on engulfing patterns, and you could see in here markets opened lower there and there and there, and each one of those had an engulfing pattern as buyers came in during the day. The sellers came in on Monday because, well, it looked like UK May was losing support, and there was some fear about a hard Brexit, and the British pound started to fall. But, you know, buyers came in as seemingly do all the time. Tuesday saw weak Chinese data, though the German data was pretty strong. So you could see it dipped in there, and then you rallied right in there in the European markets. S&P's following that stuff pretty closely. US PPI came out hot, and they estimated it up 0.1%, and it was up 0.4%, now above the Fed target, and the Fed is now talking about raising the target, so they don't have to raise rates any significant way, of course. There's your engulfing pattern right there as the market recovers. On Wednesday, the Asian markets drop again, and that brought in some significant selling. Markets were down a lot, but look at this huge recovery there in the first hour. Again, actually that second hour. And then the markets kind of eased back. This case, Asian markets were stronger on Thursday, and everybody was thinking about that vote coming up in the House and believing it was going to pass. So a lot of buyers came in overnight, and factory orders were strong as we got past the hurricanes, and that gave a little lift to the market, and buyers just simply came in. Nasdaq just screamed on that day as we had that very big advance. On Friday, not a lot of news. The housing starts were really strong. Fed heads were out talking that rate hike for December, and the market softened, as you can see right in here, after having that big day, and it's basically done nothing in here for the rest of the day, just slightly to the downside for the stock market. For the day. For the week, the stock market, however, we'll just call it, narrowly mixed, really, after that, swing to the downside and then the recovery. And S&P 500, the Dow Jones, small losses on the week as we get into the second 2 hours left to go in the day here. And the Russell and the Nasdaq up small on the week. So not all that significant of movement that we saw net on the week, though some pretty good moves during the day. We saw implied volatility move up on some of these mornings pretty significantly, but again, as buyers come in, they really couldn't keep volatilities up. Bond market, solid gains. We expected a rebound in the bond market this week. 30-year gain just under 2 points. 10-year moved down 5 basis points on the yield in there. And there's a flattening of the yield curve going on, and there's a lot of talk about that. And I actually think that the Fed is not going to allow that to happen. They won't get it too flat. They're going to do something, as I said before, and we saw it happen, to break long-term bonds. In other words, get the longer-term rate up so they can get the short-term rate up, and then not flatten the yield curve, not hurt the banks, not get people scared, and as they try to hold everything together as we continue to move up that stairway. The flattening, so I wouldn't make a big deal out of that right now. The dollar moved down about a penny. We think there's a bounce coming. I'll show you that in the short-term view, but I think that bounce is a sell, and I think there's a lot of risk here in the dollar, so we want to sell that bounce if we get it. Gold market strengthening, the pattern improving in there, and again, I'll show you that at the end of the show. Also, silver up 27 cents, gold up about 12 bucks, so it was a decent week for the precious metals markets. Oil market down about 60 cents. It was down $2. It got hammered early on in the week as it had that big rally, gave a lot back. The energy stocks really took it. I'm going to show you there on the list of the worst of the week coming up. So the stock market, it refuses to correct really at all. I mean, we get something like 1% down or a little bit more, and then the buyers come in. And you can see on that chart I showed you that the buyers come in pretty aggressively when the market is down. I saw a interesting article this week put out by Zero Hedge with a chart that was put out by Deutsche Bank that I would like to share with you. I think it speaks volumes about the length of the advance that we have had in here. And, well, talking about what is the average advance before you have some 3% correction, what is the longest time period before you get a 3% correction. So I'm going to show you that graph right now as I put this one up for you. And here it is. This is the duration of the of 3% drawdowns, of between the 3% drawdowns. So what I want you to see in here is that it shows you that the median period between 3% drawdowns over this post-war period, so you're looking at 1940s all the way through today, is 38 days. Not very much, right? The average time period between 3% drawdowns is 48 days. When you're not in a recession, the average is basically 51 days. So when you're in a recession, there's shorter time periods between 3% corrections. So this one is about a week old right now. So right now we're at about, let's say, 262 days since we had a 3% correction. The longest period was 1995 in history, which was 266 days. Now, I went back and looked at that 1995 chart, which was an extraordinarily strong market, And actually it went, most of that year with corrections pretty much contained in the 4% range. So there's during those really strong years, it did not give a lot of ground at all. And that is very similar to what we're going through right now in the stock market. So it's possible that we're going to get a 3% drawdown pretty soon, because I would say that this is certainly an anomalous period. I mean, if you get 2 of these in something like 70-something years, that's certainly very uncommon. And you could expect that even though we're now just about equaling the record period of time, that it's coming. It's probably too late for the bears, because I know what bear traders are like. I've had my share of being in that place. And what happens is that the money is gone and the energy is gone, and by the time they fall, you can't get the money back. For the bulls, it's certainly your time. And of course, it's just a window of time. I've seen a lot of these windows of time. I like to quote myself, and that is that when you remember that when you're at the top, you're only there for a visit. That's a good thing to think about when you look at, well, maybe your long-term holdings that have extraordinary gains and you're feeling really good about them. Talk about extraordinary gains. We're going to look at the best stocks for the week. All right, best stocks for the week. We're going to take a look at a bunch of charts in here. Retail has been on our list a lot lately, as we have seen, big movements in retail stocks. As well, many of them have gotten absolutely hammered by Amazon and online sales. Some of them have been able to keep up with those sales. We've seen Walmart have a fantastic upside move here, as they're executing really well. We've actually seen Target not execute well online, and that is having a very, very tough time as far as competing, and Target had a bad time of it this week. I'm going to show you those stocks, but first I want to show you the biggest movers of the week on the upside. And the first one is in the category of these beaten up stocks. These retail stocks, they've had very low estimates, and it doesn't take much to surprise. And one little bullish comment that they they might have some better comps coming forward, and these shorts come in and absolutely scramble. And some of these have been perfectly timed based on our analysis. Take a look at Foot Locker here, and you can see Foot Locker moves into an intermediate resistance zone. How about a 28% gain on the week, as it absolutely soars to the upside? On Friday, it gains $8, just absolutely incredible. Now, the cyclical analysis, and for those of you new, I'll just show you what we're looking at, and that is we're looking at the rhythms of the market. It's a visual depiction of money flow. In other words, you could see how money flows in and money flows out based on these, and these point to the expected low periods. Now, this low came right over here, which was a little bit early, and this one's right over here, so it's a little bit off. This is not one of our most consistent stocks, but you can see the cyclic patterns and the low do here and the giant rally. So that came pretty much right on time. It's in this resistance zone. Their earnings were good. They beat. Their comps were weak. So this was just, in my opinion, scared shorts. So yeah, it's only the first week up off the low. It can bounce around in here and might even make it over 45 bucks. You could see the projection to the 34-week moving average and that 38.2 major resistance. It says 32.8. That's backwards. So that's the resistance area, just over 45. So maybe it can make some more ground in there, but monstrous move this week. We give kudos to the bulls that bought the lows in there, that's for sure. Giant move. Abercrombie, another one. Look at that. This one not necessarily timed on the low, but timed right on that intermediate support that it got down to, and then explodes to the upside again. A $3 gain 24% here on Friday alone, as it gains 27% on the week. So just a monstrous move in Abercrombie. Also, these teen retailers did well, as ANF, their earnings were strong and their guidance was stronger, so they like that. As far as Gap stores, they're up 10% on the week. They had big gains. Earnings were good. Analysts upgrading this one, and in this case you could see the cyclical analysis is just perfectly timed. So if you look at where the bottoms are made and the rally comes, the bottom and the rally, perfect timing, right? The bottom and the rally, that one's a week or two early. Bottom and the rally, this one's a week or two late. This one is right on time. It moves above this level right over here, which is anticipated after this bullish cycle. So very likely going to move to a new recovery high. We'd expect it to get over $31. So second week up on this one, and a very bullish chart. We're going to want to be buying dips in this. Urban Outfitters up 9%. American Eagle Outfitters up 8%. So the group definitely very strong. That's a look at those retailers. We're going to take a look at Square. Now, Square is a stock that they can't afford to make a mistake. Well, they haven't been making any mistakes and really executing well. Square doesn't have very readable patterns based on my type of analysis because, well, it's never has downticks. I mean, the stock has come up just an amazing amount. It's up 200% this year, and analysts upgraded it again. You can see it just flew through this resistance area right over here. It's the way this looks is like it should be coming down for the next maybe couple 3 weeks in some sort of a correction, but that's not anything that we expect is going to be anything that significant. But again, like I said, it really cannot afford to make any kind of a mistake, as this move up in here is brings it up to an incredible valuation. There's been a lot of earnings upgrades in here. This 43-cent projection for 2018 was a very big upgrade. It was more like around 20-something cents. But still, the projected PE on that great performance is 100. This is just massively overpriced, and at some point they're going to slip a little bit and the stock will get cratered. So valuation is just at a crazy extreme, but who could fight another move up towards the heavens? Next thing we're going to look at is Walmart, WMT. And this is a great looking stock, and I have been really positive on this, and it moves up into this resistance zone. I wouldn't be surprised if it stalls here. Earnings great, their online execution great, their sales overseas great. So everything about it great. And we talked about some months ago the battle between Walmart and Amazon, and that Walmart's online growth was more than 2 times the online growth of Amazon, and you could see it reflected right here in the stock. So just absolutely great when you look at that. A few other stocks we're going to look at in here, and the next couple we're going to look at are the kind of stocks that you think about as you get to the end of the year, because the beaten up stocks all of a sudden start to get bids, and especially in a year like this, because as people nail down some profits, they want to nail down some losses. So stocks that have been done poorly tend to get sold right towards the end of the year to offset those other gains. Now, then you start to look at those for getting pops right at maybe the last week of the year, or last couple weeks, and then into the beginning of the year. The next two I'm going to show you are in that category, and the timing is right for them, and the pattern's been bad on these stocks very clearly, and you could see that in here. Note the value of the 34-week moving average in here. In Teva moves down and then gained 16% this week as Apollo Management takes a stake in the stock. Note the perfect morning star formed right in there, or as we call it, an inside up. You will see that the 34-week moving average has been just absolutely huge resistance for it. And right now, if you project it down, it's probably coming into the area of about 21 or 22. The resistance right over here is at 20 to 23. So the stock is 1381. There's a real good shot that you could make a very good percentage gain here sometime between now and maybe the first few weeks in January. So I would keep your eye on this one. Overall, you know, they've really struggled because of the competition in generics, and you know, what we're looking for is a bounce, and I think it could be a sizable bounce. So up 16% on the week. If it pulls back a little bit, I'd buy some. Pandora in here, you can see it's making a low exactly at the point we expected it to. This is the kind of stock that, to me, the model is unproven. The only way that they're going to go anywhere is if somebody buys them or there's a rumor of that, which I don't know anything about, but all I see is the perfect timing in here. Again, I can show you the cyclical analysis. Whenever you see the blue timing spikes right there, it says that's the point we expected the low. Again, you could see the decline and the rally period, each of those giving you sizable rallies, except this one, which absolutely sucked, and then broke down right over here and gave you that big collapse. This one broke down over here, gave you the big collapse. This one just starting on the upside. So if you look at the length of rallies and how strong they are, basically you get a month on the upside once the bottom is made and some decent upside move. Well, that's 4 out of 5 of the lows, and we're just starting in here. So I guess you could expect, if you can buy the stock around, let's say, just under 5, you probably have a decent shot at 6.5, which would be a very nice percentage gain. So Pandora up 12% on the week. Analysts have upgraded this stock, and that's my opinion. Just, you know, bottom picking, looking for a bounce in there, and nothing as a real store of value. The last one we're going to look at here in the best of the week is Tesla. Now, Tesla gets a bounce this week, and they had a good day today on Friday. They're up 1.3%, $4 on the upside, moving up into this resistance zone right over here. It's a declining resistance zone because this has been a declining stock. It had a big breakdown, and it now tries to get a bounce. The news came out that, wow, I mean, they have a electric coupe that they're bringing back that is just incredible. I mean, 1.9 seconds, 0 to 60. I own a supercar, and it gets nothing close to that. So that's just incredible. With a 250 mile an hour top speed. Well, it's just $200,000. So it doesn't compete. It's worth nothing to the bottom line in Tesla. If anything, it may be another cash burn suck that they have there. But their release of their electric truck with a giant range and a beautiful looking thing, well, that could be some value down the road. I mean, I don't know, what is it, 3 years or 5 years down the road before that could potentially make any money? Again, they have huge delivery problems. They have failed miserably on the Model 3, and our opinion is the stock moves lower, and this is a fake out. So it gets this 4% gain on the week, and I think that the stock is going to head lower. That is the stocks that moved up in the best of the week. Tesla is really, in my opinion, in the category of the worst of the week, and I like those little cheapy stocks that look like they're likely to get a bounce. We're going to come right back with the worst stocks for the week. So for the worst stocks for the week, well, oil had a pullback. Light crude, like I said, was down $2 at one point, but then bounced back at the end of the week. And the stocks that took it the worst were the drilling stocks on the downside. These stocks have some pretty good volatility when you look at the moves in here, and RIG, which is Transocean, and Noble Corp NE both down about 10% on the week. Diamond Offshore down about 9% on the week. Let's take a look at those stocks quickly. And you're going to see stocks that basically I think are in corrective phases, but then are likely to be moving again to the upside. So a stock like RIG, which has had a big upside move, we're going to expect that there's an opportunity coming. And I think that opportunity is really just in a couple of weeks. So down for 10% on the week in this corrective mode. Now note it backed off from that 78.6%. Note that it looks like the correction comes down into about the second week of December. And then I think it's going to be a bullish base that's built in there and could be good. So you could put a stock like RIG on your list of potential stocks to buy. Noble Corp NE, you can see a similar situation in here as it got a rally, and we're looking for it to dip here right into towards the end of the year. But then after that, it could also have a big base built if it doesn't make a new low, and that could be a good one. So I'm bringing in some stocks that were bad or good that likely are viable coming up not too far off. Here is Diamond Offshore. It's the same exact pattern as we saw in Transocean, where it's pulling down in here and has maybe another few weeks to go. This looks like about week 3 in December before that bottom is due and then go up. So these stocks pulled back and correcting and really very positive. Now I'll show you something different in the group, and that's Neighbor, NBR. And you could see this one actually broke that low right over there. So that makes it a negative stock. And while it looks like a decline through the end of the year, the decline in here could be steeper because it's really negative. And everything you can see in here is negative, as momentum that we look at is negative, cyclical patterns all negative. So Neighbor is not one that I would buy. Halliburton and Schlumberger, I'm not even going to put those up. Those were down a little bit on the week, like about 5%. And Schlumberger is one that's also in one of those negative patterns. And again, we're looking for sometime in December before those declines are over with. So we don't see oil moving up in a big way over these next few weeks. And I think it's going to give an opportunity for these drilling stocks to finish these corrections. The stocks that are in the integrated oil category also had declines. ConocoPhillips, MRO, Exxon. You could look at all those patterns. You're going to see that they were good, and now they're pulling back, and they actually have the same timing. So if you want to take a look at those, they all look like somewhere around mid-December as the time period where these are likely to move up. We think that about gold also. Maybe there's a commodity bull market going to start somewhere around the end of the year and move into the beginning of next year. I'm really thinking that's a possibility. This week we did an interesting video, and if you become a member, I'll talk more about that. You'll be able to see this video. We looked at 24 stocks that were set up to move lower, that had negative patterns, like I just showed you in some of these drillers like NBR. I also gave 6 stocks that were set up for rallies, I thought. One of those was SunPower, SPWR, and it's down 8% this week. I think it's a really good opportunity, and I'm going to show you that SunPower chart. And if you want to see the other 30 charts or 29 charts, then please do watch that video. So SPWR, the stocks that are in the solar category have gotten better, and it's all about, well, First Solar executing really well. That stock was super high priced. The stock was just strong, and all of a sudden we know why, because the earnings just were great, and now it's not so super high priced anymore because the earnings are catching up. SunPower has got a really bullish pattern to it, so it's down 8% on the week, and this is on that list of 6 stocks that I think are quite viable. And this already has this base built right in here. You could see that timing and the low do right there, and then it turns up. So we had like a couple of week rally, but when you get a base built like you see right in here with that upward slant, the odds are very high that it's going to get up and test this level, which is near 12. The stock is trading under 8. I love it. Down 8% on the week, and I think it's an opportunity. The last stock we're going to look at is one that I think is not an opportunity, and that is Target. Target blows it. Their earnings were really bad, and they're spending a ton of money to try to get online, and it's not working for them. Now, these patterns are negative. So I want to show you what I mean, and that is that, well, you see this rally in here? That's this one right over here, and then it breaks down under this low. Well, that sets up what is a horrendously negative pattern that you could see right in here. So then it gets a decent rally and looks good, but then it rallies right to resistance and breaks the low. That says it's likely to decline out till February. Man, I think if you get a bounce in here in Target, it is a sale. I don't think they're executing. I think they're getting left behind. And you know what stocks that have been getting killed by Amazon and now by Walmart have done, and this one they attempted to bounce, and the bounce really looks wrong to me. So I think that Target is a sale, and if I own the stock, I would dump it. And I think that it's going to have a tough time for the next couple of months. This is a bad pattern and a breakdown in Target. That is our worst stocks for the week, and with some buying opportunities, right? And in a moment, I'm going to show you our short-term view for the coming week. All right, short-term view for the coming week. Before I get into that, I want to give you a little bio. How's that? I'll tell you about me. A lot of people that are our members, well, they know me. They know my history. They saw me on another network for almost 4 years doing daily shows. But when you go way back, 1974 is when I became a member of the CBOE, and so I became an option trader way back at that time. And when I came on the option floor, there was actually no puts. We only traded calls. So that's how early it was that I was on the CBOE. So I really, honed my skills in the option pits way back there. It was 1975 that I read the book Profit Magic of Stock Transaction Timing, and that was the beginning of me starting to learn and grow my own version of cyclical analysis that you see here all of the time. Along the way, I had the normal or maybe excessive number of bumps and drawdowns and challenges, and I decided to figure out what was going wrong, and I started to be involved in personal growth work. And after I started to do that, I became a facilitator, faculty chairman, and have written many protocols around personal growth, self-healing, self-awareness, speaking in a language that is much more healthy, turning off that self-talk, all of that. And I've just coached numerous traders and done just an amazing amount of things when you think about the financial markets, and you see a lot of that here. So that takes me all the way through trading for 43 years, and had a hedge fund and didn't really like trading other people's money, but I did well, and then went into media and more teaching and coaching, as you see me do right here. That's kind of the short bio for all of this time I've been in the market. So that comes down to the fact that I produce videos and essentially teach everything that I've learned over all this time for your benefit, really. I produce every week 4 new videos that fit into 8 different categories of videos. You see me do, our members see me do tools for techs, where I teach about many different studies, stock sectors, like this last one I did this week, where I looked at these 30 stocks, 24 ready to decline and 6 ready to rally. I look at a lot of individual groups there. Also, the trader psychology, where I look at processes and individual trader issues that help get past the obstacles to success. Do big picture analysis and long-term for IRAs. I would call that IRA MO, and several more categories that I think are of incredible value to you. We have right now over 250 videos in our library, and I want to make it so easy for you to see those, to learn from my experiences. So all you have to do is become a level 2 member to get all of those videos, and I want to make it so easy for you that all you have to do is write me an email, slim@askSlim.com, and I'll send you a link for half price for a month, and you can cancel after a month if you don't want to stay, do all the binge watching. It's up to you, for just $16.50 for the whole month to watch all those videos and the new ones that I bring out each week for that month. I don't understand how you could not do that. Because I think that there is just so much of value in there, and of course it helps us and helps our community grow and brings longevity to what I do here. So I encourage you, send me that email, slim@askSlim.com, and I will send you that half price link, $16.50. I think you'll love it. All right, so let's take a look here as we look at the short-term view, and what we always do is we want to be accountable to what we said and did the week before, and our goal is to be as close to 2-to-1 right versus wrong, and we're pretty much spot in that area. We're about 65 to 70% accurate this week. We measure accuracy by the patterns that we expect, by the direction that we expect, and by the price levels that we expect. So there's a lot of criteria that we look at, and I think overall this was a fairly strong week. Light crude, we were really good. The dollar, we were right on the dollar, but off a little bit on the euro, so we're only going to take half credit for that one. Where we missed was gold and silver, which we expected that they would have down weeks, and all of a sudden they really firmed up and have improved on those patterns. I'll show them to you. Bond market, we were really good. I mean, we nailed the lows that we expected in there. And the S&P 500, we expected that it would pull back and be down for the week. Depends on what you look at. A couple indexes are down, a couple indexes are up. It's not very big changes. But we expected declines into the midweek area or longer, and to the S&P 500 at 2557, and we absolutely nailed that low. So that was really good. And now I'm going to show you right now what we expect to happen for the coming week. We're going to start out in the energy markets as we always do. I'm going to switch this over to a daily chart. So we look at daily charts to do our short-term projections on, and let me get this up for you right now. So we're going to start in light crude /CL. So here is that light crude chart, and again, it has our cycle analysis on it, and what we do is projections, and our level 4 chart subscribers get all of this to put on their thinkorswim platforms. Of course, that's TD Ameritrade, and thinkorswim is the platform, so you might want to open an account. If you do, again, send me an email. So this is the a look at the pattern in here. Now we have been showing in light crude that there have been 4 small minor cycles within the bigger cycle in this harmonic family, and each of those have given you, well, readable to not quite so readable patterns, and that's what we expected. We expected a decline right down near this area, another bounce, it gets up into minor resistance. So you can see, based on these 2 coming down in here, it looks like we should get a pullback here for the next week, but that would be setting up a stronger gain after that. So it seems like we're getting just a correction in here, and then likely to get a little better time more towards the end of November. So what we're going to do is we're going to look for a range in here. That range being between 55 and 57. So the top of this resistance area is just right around 57, right over there. The area of where it came down here and got support, which was right inside the slim ribbon, was at around 55. So we're looking for that 55 to 57 range in there, with maybe small down on the week, and then the following week is when these turn upward, and then you can see our projection is that it points up and then gets through the minor resistance after that. And these are all, if you look at the big cycles right in here, these are bullish patterns, so the odds are pretty high it's going to look something like that. So we're just looking for a pullback in here, and that actually should be buyable. But we think that based on the intermediate term, it's probably not going to scream on the upside, just us maybe test those highs, but that's a little longer term view. We're going to call this week in that range of 55 to 57 and maybe small down on the week is what it looks like. So the dollar DXY, we expected it was going to be weak and then make a low, and that's exactly what it did. It got down over here into the minor support, gave this big hammer that you see right there, and now is trying to make a bottom in here. We're going to call the dollar small up and fail. So based on the pattern we're looking at in here, it looks like, you know, early part of the week it should go up. Let me just get right in here. There you go. Early part of the week it should go up, but then it's in that resistance, and we consider that to be a sell zone right in there. So if the dollar got up here above that 94.30 number, that looks to me like the spot that it should be sold. So it's not that big of a gain, and it potentially should do it. If it starts to trade down under this 93.42 area, that's not going to be good at all, and it's going to say that the intermediate decline that we're in is getting stronger to the downside. So I think the highest odds is that we get a rally in here, and I think that the rally is going to fail. We'll just look over at the euro currency, and because some people trade the euro instead of trading the dollar because they are inverse to each other, we actually expected that the euro in the last week was going to come down, and it was going to last for a few more days, but it got new legs, and then we thought this was the low right in here, and it was curling over right in here, and then would get into that rally period. It's not what happened. It got really strong. It hit this resistance zone, gave that shooting star top. That kind of looks like it's a tough spot. So we're going to look for a narrow range in here also. This area right up here around, we'll call it 1885, that's probably the top of the zone. When you look at the area of about 117.70, that's this low to 117.50 in the slim ribbon. That's probably the downside that we're going to see. So we're looking for, we'll just call it kind of a choppy week for the euro, narrow range, while the dollar gets a bounce and then fails is how we look at it. So not a lot really when we look at that in the currencies. And so probably not the best trades or best opportunities in there. We're going to switch over to the gold market right now. And the gold market really got better than we expected that it would. Now, there's so much on here. I've got to get in here so you could see what we're looking at. So we thought that, you know, that it could get up into this resistance zone, but it was, you know, likely not to be able to get very far. We thought that the downside was going to be around 1265. You can see right in here it gets to 1267. So that was, you know, very, very close to what we expected. And we thought it would stay down for the week, not get this upward turn. So that's good. You can see that it's moved up here. It's up 1560 now. So it's better for the week than I said in the beginning of the show. And this is a much improved pattern. What it looks like to me is that this is elongating and moving upright in here. So 1297 is about the top that we see in here in this move. Then maybe a little move down here to about 1278, 1280. And then this area over here, that's about 2 weeks from now, really sets up for something that could be stronger on the upside. So we think we're going to get just kind of a little bit more rally, then pull back by a little bit. That range again, about 1278, 1297 on the week, and then setting up for something I think more positive. The silver market in here, it did the same thing. You could see that right in here. You could see this these cycles that now it gets up into this resistance zone. We thought it would get down to 1665 on the week. It did not. It only got down to 1680 and then turned right up. So we're not giving ourselves any credit for this precious metal market because we thought it was going to be down, and it's up even though it started out right around our targets. So this is much better. And so what we're looking at now in the silver market, similar to gold, is maybe come up a little bit more in here. 1725 is potentially the area that I had it targeted, but now it looks more like the top of this range is a possibility, right around 1750 area, 1755. So that's since I did this analysis early in the morning, it's even gotten better. So the top of the resistance looks like where it could go, and then probably roll over after that, just for a little bit of a correction. Now this area in the slim ribbon, we'll call that around 1695. That's about 17 even. Really looks like the bottom of that range. So 17 even, 1765. Again, what we're looking for is maybe a little bit more rally and then roll over, and then after that, a couple weeks from now, is the time period where the stronger period sets in. So much better period. The Bitcoin has been, to me, just the canary in the coal mine, on the Bitcoin mine, that says to me that before you know it, Bitcoin's going to weaken, and the attractive investment is going to be the precious metals. I actually project that will be next year, but it's just really something to keep in mind, as especially for me as a cyclic analyst that sees its strength in at times when I think it's going to be softer. So I know something is going on in there, and that's pretty strong. /ZN is something that I hope to look at pretty soon. /ZN, there it is. So this is the 10-year note. Our expectation was that it was going to move down and then bounce, and that the downside objective that we had for the week was at around 124.21 to 14. It got down to 124.15 and then had the bounce. So it did exactly as we expected, perfect into that support zone and then up. I think the bond market is just in a bear market bounce in here that's going to last some weeks and then going to collapse. But I'll do that in a big picture analysis of the bond market in just the next couple of weeks. Here is the ZBs. We had expected that it would pull back to 152.02 and then move up. Here's the low on the week, 152.01. and then moved up. So it was just spot on, and as you could see, it's having trouble in that resistance area. So for the next week, for the bond market, for the 10-year and the 30-year, we're kind of looking for rallies that fail. In other words, try to get up into this zone again and then roll over, as you could see that projecting out over here. So we're not real optimistic in here. We think that it's about 124.27 to 155.06. That's this high right over here up to the top of this resistance zone. That's the best we see the rally getting up in here, and then we think it struggles and rolls over. So like I said earlier in the show, the Fed doesn't really want to let bonds get too far on the upside in here. They don't want yields to come down too far because they want to be able to raise interest rates, and they won't do it if they have to flatten the yield curve. So I think they're going to, at some point, encourage the bond market into a big downside move, and that might be the bubble that bursts that affects the stock market too. Let's take a look at the stock market. The pattern that you're looking at in here is very slightly different than it was when we looked at it last week, in that it made its low a couple days earlier than I expected, which had us shift these patterns over by a couple days. And our expected low for the week was 125.57, right on that support, and it nailed it. Just absolutely great. We thought it might come down another day or two before it had a bounce, but that isn't what happened. So now where are we? Well, we're in this rally period of these two cycles pushing on the upside. That should be able to keep it alive for a few more days in here. Then we expect it after that to begin to fail and roll over. That 125.57 number is now a giant number because it's the bottom of this cyclical pattern. If it breaks, it confirms the intermediate correction coming in, and then you get your 3% plus correction. As long as it keeps going in this stair-step upward movement, I'm just going to blow this chart up a little bit so you can see what I'm talking about. Right in here, these last cycles, and I'm projecting it to break down. You can see that. So you have this bullish cycle here, 19 days, bullish cycle here, 18 days, bullish cycle right in here. I don't have the count, but it's 18 days, right like this. All of these higher lows, all of these higher highs. So the question is, can it keep that upward stair-step motion going? Or, as I have it projected, it maybe ekes out a new high, but then rolls over and breaks down. I have this projected this way because the intermediate patterns are suggestive of the fact of a topping and a pullback. So I'm tending to be bearish based on longer-term patterns, and overall that's not been the best way to be. But I'm going to stay with what I think is the highest probability. So we're going to look for a choppy week, choppy to the upside and then turn down. We're going to look for a small downside week in here, fail in the area of the 125.92 to 125.97, right around that old high, a shot at that fib extension at 126.02. So, you get my drift. It's kind of up in there and then fail and then roll over and then be in a trend where we actually are moving to the downside, which will be somewhat of a shock to many people. That is what we expect for the stock market and our short-term view for the coming week. Hope there was a lot of great information in there for you, and if you again want to get our all of those videos for you to, I think, learn from, you'll be just astounded at all the stuff that's in there. Send me that email, slim@askSlim.com. I will be glad to send that to you, and then you can watch all our videos for $16.50. How's that? Follow me on Twitter at askSlim. I'm always posting stuff on there, and a lot of political stuff also, so I try to avoid getting too political on the show, but I'm not afraid to do it when it comes to posting on Twitter, so just a little prepared there. And again, you can see our videos on YouTube, a lot of them also, so follow me on YouTube, and I look forward to getting any emails or questions from you. I want you to be really careful because, man, it is so crazy out there, and I'm always wishing you great trading.
Well, I'm going to